So hi everyone, it's Jordan right back here, and in this video we are going to be looking at the double bottom chart pattern. So the double bottom chart pattern looks exactly what you're seeing right here on your screen, and see that here we have two bottoms, okay, or what you're seeing right here in this image, okay. So the double bottom occurs on a clear downtrend, and it signifies a bullish reversal. Therefore, a double bottom is a bullish reversal pattern. Okay, so the double bottom occurs on an uptrend, and when we are able to spot this double bottom, it shows that the current market direction, which is a bearishness, is going to change into bullishness. So this pattern is confirmed after the price breaking through the previous level of resistance, and also this previous level of resistance is known as the neckline. So the tops the bottoms should not necessarily have the same swing lows. Okay, this was poorly corrected. So the bottoms should not necessarily have the same swing lows. Okay, so what we're saying is that within a clear uptrend, okay, within a clear downtrend, like this, breathe in, breathe out, breathe in, breathe out, you'll find that the market makes a swing low, and then after this swing low, it will go backwards and then break the structure. So we are expecting that the market is going to come and find support at this previous level. Okay, it is going to come and find resistance, not support, on this previous level of support, and then to swing low, but it fails and then breaks through this level, and then it goes back to retest this previous level of support, and then it goes high again. So when it breaks this level here, the resistance created is what we call the neckline. So there we confirm a double bottom chart pattern. So you can find that we can have a retest on the neckline, and then we swing high once again. Okay, so the double bottom shows that we are going to change from this downtrend into an uptrend. So these bottoms will normally not have the same lows. So for example, you can find that you have on a clear downtrend, then you form your first bottom, then the second bottom is slightly lower, so it could also be joined like that, and then this neckline could also be joined like that, and then after the break and then the retest, we expect an uptrend. Or sometimes you can find that, like right here, the second bottom is slightly higher like this, or sometimes you can find that these bottoms are equal like that. So the swing lows are not necessarily supposed to be the same. Okay, so you can find that they're the same. Sometimes one is higher, another one is lower. Okay, so that is the double bottom chart pattern. It is only confirmed after this level of neckline is broken. So that is when we start to confirm the double bottom chart pattern. So this pattern can be traded in three ways. One is support and resistance, then a breakout, and then a break and retest strategies. So we are going to be studying these strategies one by one. Okay, so the first strategy we are going to look at is what we call the support and resistance. So you can see that I've zoomed out this chart so that we could be able to spot and see that right here you have a clear downtrend, series of higher high and then higher low pattern. So you can see that after the market went to this swing, we are expecting that the market is supposed to break through this level. Okay, so there are two different ways of the market breaking the structure. If the structure is supposed to be like this, so the market could break structure by failing to create a swing low that is lower than this one. That is one. Or sometimes the market fails to make a retest and just breaks a retest away from this previous level of support. So this level of support, you can see here that we have a support, it becomes resistance, support, sorry, here support becomes resistance, then here support, it becomes resistance. So if this structure of support, break and then retest is failed or is broken, that is when we start to look for double bottom. So right here you can see that the market was on a clear downtrend right here. So after the market reaching here, our first level, you can see that the market was supposed to come and retest here, which it did, and then it's supposed to break below this level. So the market failed to break through this level. Okay, so it then make a very big rally up all the way up there. So here you can see that we also made a second rally down and then a rally up. So this is supposed to be our neckline. So I have zoomed out this chart so that we could be able to see how to trade the support and resistance. So when the market is on a clear downtrend, breathe in, breathe out, breathe in, breathe out, breathe in, breathe out, breathe in, then the market breaks the structure. So when the market breaks the structure, it will come, create its first level of support. It goes back to retest on this level. Okay, then it comes to create a new level. For example, this would become our double bottom. So this one becomes our neckline. So when the price breaks this neckline here, that is when we confirm the double bottom. Okay, so you can see that right here we have this bottom and then we have this bottom. So the width between the bottom does not matter. So sometimes it could be light and then sometimes it could take a longer time to form. It still remains a double bottom. So this was wide. Okay, so here we have our clear downtrend. So we have our first bottom and then here we have our second bottom. And then here we have a new rally up to this level. So in support and resistance, we are trading what we have in the mind, what the market is going to do. So when we are having this breathe in, breathe out structure, okay, when the market comes and breaks this level here, instead of retesting on it to continue downwards like that, it breaks that level. So we are expecting, so here the market rallies up. So when the market rallies up, we expect it to come back and retest this level, create a second bottom. So here, this is where we shall see that the market is going to find resistance at a certain level. So for example, here, it found resistance. So we are looking for a candlestick pattern. So for example, you can see here that we have this inverted hammer. This candle here, you could also have some dodges. Okay, so after those dodges, you could put your sell stop order right here and then take profit, sorry, the stop loss, and then you could be able to catch profits at this level of support. So you're expecting that the market's going to come and drop to create a second level. Okay, and then after it's creating this second bottom, it has to go back again to at least the minimum of this level. So here we were supposed to wait for a bullish candlestick pattern. So you can see that right here we have a bullish engulfing, and then after this bullish engulfing, we could put our buy stop, put a stop loss, and then we could be able to catch profits at this level. So that is how we trade support and resistance within this double bottom. So one, we are expecting that the market is on a clear downtrend. So the market creates a first bottom and then it breaks the structure. When the market breaks the structure, so this one becomes a confirmed first bottom. Okay, so we are expecting that the market is supposed to come back and retest this previous level here slightly. It can test it or it can even break through it. Okay, and then after reaching this level, it is supposed to bounce off and then create a second bottom. Okay, and then it has to break through the structure, retest on it, and then go high. So what happens is that for us, what we are going to do is to make a buy order. Sorry, for example, here we have seen that we have confirmed our first bottom. So here we know that the market is going to create a second bottom. So this is when we make a sell order to go and catch the move down, and then we make a buy order to catch a move up. So there are only two trades for support and resistance. One is a trade which goes to create a second bottom, and a trade which goes down to confirm a second bottom. This one here, it is like this. So here we go short and then here we go long. So after that, after the structure has been created, so we expect the market to break this level to break this neckline right here. After breaking the neckline, retest and then swing high. Or if it doesn't retest, we shall use another strategy. So that is how we trade in support and resistance. One, we wait for this to be formed. So after it has been formed, we see that this is going to become point A, or what we call the bottom A. So after bottom A, we shall see the market is going to find resistance here. It will always find a resistance at a certain level, which was previously resistance. So here it was a previous resistance. So here the market gives us some dodges, so we could be able to make a sell stop order and then catch profits here. So here we know that the market is going to confirm and make for us a double bottom. So here wait for a candlestick pattern. It's a bullish engulfing, and then we catch the wave up. So the next strategy is what we call the breakout strategy. So in breakout strategy, we have been looking at this strategy in several videos. So if you've been following along, you could be able to spot. So you can see that here the market is having series of higher high and then higher low. So we are expecting the market to make a swing low to come and reach this level right there. But the market here fails to reach. So it means that the structure has been broken. So when the structure is broken, you can see that here it creates its level of support, and then it comes and then finds level support at that level, and then makes a second low. So this is the first bottom, okay, and then this is the second bottom. So after this first bottom, the second bottom, you can see that here the market breaks out of the neckline, this level of support here. When the market breaks out of the neckline, we wait for a candle that closes entirely above the neckline level. So if this is our structure formed, we wait for a candle that closes entirely above this neckline level. So we wait for this candle to close entirely above. So like this blue candle I have circled. So we could put our buy stop order and then catch the wave up. So you have to factor in the fact that the market, when it forms a double bottom, it might swing high at once and then come back later to retest, or it can make a minor retest and then goes high. So that's why we put our stop loss with a professional way. So here, if we put our buy stop order, then stop loss is here, and then we catch take profit 1 is here, and then take profit 2 is here, and then take profit 3 is right above there, only if the market goes all that far. So you can see here that after this minor retest, let me clear the screen. So here the market forms this double bottom. So the market breaks out, it creates a minor retest, or a retest probably, and then it goes high. So here it is going to come back, retest this level, and then make a new wave up to come back and fill in this gap. So that is how we trade the breakout strategy. Number one, we confirm that we have made a double bottom. So after the double bottom, we wait for a candle that breaks out of this level of support entirely. The candle is supposed to close entirely above this level. So if for example, you see this candle here, this candle is not an entry candle. Yes, it is a candle which broke through the structure, the neckline, but it is another candle which entirely closed above the neckline. So we wouldn't make our order from here, because the market could come and make a structure like this, tries to pierce through, and then it comes back. So you to make either a triple bottom. So you can see that you would have gotten losses because of that. So what we do is wait for a candle to close entirely above that level. So after that candle, so we could put our buy stop, and then we factor in this minor retest that the market is going to come and retest, and then it will come and reach this level. So if the market is to come all the way up right here, it might not go up in a straight line. The market could also make series of higher high, higher low, some minor consolidations, break, higher high, higher low, like that. So another strategy is the break and retest strategy. So the break and retest strategy is whereby the market is moving, and then it forms this double bottom. After forming a double bottom, it will come and retest on the neckline break right here. So for example, here you can see that it made a retest on this neckline break. So we wait for a candlestick pattern. You can see that right here we have a big bullish candle, and then here we have this doji. Here we have a hammer. Okay, this shows that we are bullish. Then this hammer was confirmed by this long bullish candle, so we could put our buy order up and then catch the wave up. So in the break and retest strategy, when the market is on a clear downtrend, breathe in, breathe out, it creates a first bottom neckline, then it creates a second bottom. So the market breaks this neckline level. When the market breaks the neckline level, we don't buy. We wait for the market to come and retest this level of resistance, the neckline, to become a support. And then after forming a candlestick pattern on this support level, which is a broken resistance, we shall be able to catch a wave up. And when the market is going to catch the wave up, it will normally go all the way up from the previous point of swing lows where they started from, but it will still make series of higher high, higher low consolidations like that. So that is how we trade the double bottom. Thank you so much for watching this video. I'll see you in the next video. Do not forget to subscribe to the channel for more videos like this and for support. Bye.